Did you know that star investor Cathie Wood is buying Tesla shares more than she normally would and did? Amidst economic uncertainties, Cathie Wood remained to be a Tesla bull. Unlike other investors who cast stones at Tesla during the past rough year for the company, Wood remains optimistic. You surely would not want to miss this. Famed investor Cathie Wood, chief executive of ARK Investment Management, continues to amass Tesla shares. While 2022 has undeniably been a rough year for Tesla stock, Wood showed her optimism about the company's long-term outlook and bought Tesla shares several times over the past months, with each purchase seemingly bigger than before. Giving justice to her moniker as a star investor, Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose higher. Over the past several months, Wood has been stacking up her Tesla shares whenever the stock dips low. In October alone, Wood stacked up on Tesla shares twice. After Tesla reported a miss in deliveries in early October, Wood bought over 132,000 Tesla shares. After the stock fell following Tesla's Q3 report in mid-October, Wood bought another 66,190 Tesla shares on top of the month's earlier purchase. Then, in early November, Cathie Wood's ARK Invest loaded up on Tesla shares in its innovation, next-generation internet, and autonomous technology and robotics ETFs. The company's three funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK's Innovation ETF bought 27,594 shares in the second week of November, while the Next-Gen Internet and Autonomous Tech and Robots ETFs gained 2,909 shares and 9,173 shares respectively. Yet again, in mid-December, ARK Invest, Wood's investment management firm, snapped up 74,862 shares of the electric vehicle maker across three of her exchange-traded funds, according to a daily transaction report sent via email. The purchase was valued at around $11.7 million. ARK's Tesla buy comprised 61,537 shares for the ARK Innovation Fund ARKK, 10,066 for the ARK Autonomous Tech and Robotics ETF ARKQ, and 3,259 for the ARK Next Generation Internet ETF ARKW. Tesla is the third largest holding among ARK's suite of investment products after Zoom Communications ZM and Exact Sciences EXAS. Wood's dip buying spree comes during a difficult month and year for Tesla as concerns intensify among investors that Musk, as CEO, diverted his attention away from the company to manage Twitter, the social media platform he recently acquired in a $44 billion take-private deal. Even before the year ended, Cathie Wood loaded up another $2 million in Tesla while CEO Elon Musk urged employees to look beyond the stock plunge. As Tesla shares witnessed a surprise rebound at the time, Cathie Wood-led ARK Investment Management loaded up on the EV maker's stock, having purchased 17,960 shares at an estimated valuation of over $2 million. A few days into January, Cathie Wood buys more Tesla to start 2023, even as relentless sell-offs drag down her flagship fund. Wood's flagship ARK Innovation ETF purchased 145,000 shares of Tesla worth $15.7 million, while ARK's Autonomous Technology and Robotics ETF nabbed a further 31,000 Tesla shares worth $3.4 million, according to daily transaction reports. Cathie Wood bought $19 million in Tesla stock only a few days after 2023 started. Several days after that, it was reported that ARK Innovation ETF ARKK sold 31,758 NVIDIA shares valued at $4.7 million as of the June 6th market close. NVIDIA has dropped 42% in the past year amid the semiconductor industry's slump. It also came to light that on the same day, ARK funds bought 58,044 shares, valued at $6.6 million as of that day's close. Several days ago, Cathie Wood accelerated Tesla's buying in a single week. In fact, Tesla's stock's price cut-induced sell-off on January 13th did not deter Cathie Wood-run ARK Invest from continuing its buying spree. ARK's flagship exchange-traded fund, ARK Innovation ETF, bought 168,989 shares of Tesla, valued at $20.68 million at the session's closing price. The stock ended the day's session down 0.94% at $122.40, according to Benzinga Pro data. At one point in the session, the loss was as much as 6.4%. For the week, the stock gained 8.26%. That said, the firm bought Tesla stock in all but one session. On Monday, the firm bought 27,811 shares valued at $3.3 million, then another 100,982 shares valued at $12 million on Tuesday. Yet again on Wednesday, Wood's firm bought 91,523 shares valued at $11.28 million. The purchase was paused, and Friday's purchase was, as earlier mentioned, where ARK Innovation ETF bought 168,989 shares of Tesla valued at $20.68 million. The cumulative value of Tesla shares bought for that week alone was $47.26 million, a step up from the previous week's purchases worth $27.99 million. ARK has been adding to its Tesla position ever since the sell-off in the stock intensified. ARKK now holds 3.742 million Tesla shares in its portfolio, giving it a weighting of 6.79%. With Wood's dip buying sprees, Tesla is the number 3 holding in Wood's flagship ARK Innovation ETF, behind number 1 Zoom Video Communications ZM and Exact Sciences EXAS, the cancer screening tech provider. Amidst all this, Wood's investment performance hasn't exactly impressed the investment world over the past year, as her tech stocks have slumped. ARK Innovation ETF has notably fallen 61% over the past year and 79% from its February 2021 peak. Wood has defended her strategy by noting that she has a 5-year investment horizon. But the 5-year annualized return of ARK Innovation was negative 3.3% through January 6th, compared to the S&P 500's positive return of 9.2%. The fund's performance also doesn't come close to Wood's goal for annualized returns of 15% over 5-year periods. That said, ARK Innovation's subpar returns may be starting to push investors away. The $5.9 billion fund registered a net investment outflow of $447 million in the past month, according to ETF research firm VettaFi, but it still notches a $1.17 billion inflow over the last year. Still, numerous investors have stuck with Wood despite her mediocre returns. The fact that she had one spectacular year certainly helps. ARK Innovation skyrocketed 153% in 2020. Wood also has become something of a rock star in the investment world, appearing frequently in the media. She explains financial concepts in ways that novice investors can understand. Overall, the technology sector has been one of the worst performing sectors in the stock market this year, which is in stark contrast to its monster gains during 2020 and 2021. Not even prolific tech investor Cathie Wood has escaped the carnage, and Wood's ARK Investment Management flagship ARK Innovation ETF lost 57% of its value last year. Despite this, ARK remains bullish on Tesla. Wood believes that Tesla will go 10x. In an email update to investors, Wood explained that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Tesla has grown into the largest car company in the world and now sits atop the industry. If things continue to go Tesla's way, that's not likely to change anytime soon. The future certainly looks bright for Tesla. In mid-December, investment banking company Goldman Sachs maintained its buy rating and expressed bullishness on Tesla stock over the long term. ARK, like Goldman, remains confident in the company's long-term delivery prospects. Wood pointed to loosening supply chains that place Tesla at the forefront of being able to drive down costs and prices to help bring electric vehicles to the mass market. Wood told Yahoo Finance that Elon's main role at Tesla right now is moving it towards an autonomous taxi platform, which I think will happen in 2024. I think he thinks it will happen next year. I think he's as focused as ever on that. Tesla and the EV sector in general is entering a new phase, and the company is positioning itself to continue to lead the way forward. While returns over the coming years may not match prior results, Tesla has a lot of irons in the fire. It's worth looking closely at whether now is a good time to invest. Overall, Cathie Wood remains more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continuously shows her support for Tesla and its forthcoming innovative projects. Several days ago, Cathie Wood's firm ARK Invest said the Tesla stock could hit $500 by 2026, even after excluding autonomous driving and any form of ride-hailing. ARK's 2026 price target for Tesla stock would be around $500 per share, based on its EV business alone, the firm's analyst Tasha Keeney said. The projection is adjusted for the 3-for-1 stock split that became effective in August 2022. This represents additional context to the 2026 pre-split price target of $4,600 the firm announced in mid-April 2022. Cathie noted that the firm is removing autonomous driving and any form of ride-hail from the valuation framework. The firm believes that these two factors will drive more than 60% of Tesla's value over the next 5 years. She also noted that the $500 per share projection is more than a 4 times increase from the stock's current valuation. Make sure to subscribe to this channel for more.